Earlier this month, a federal court has found Google to have an illegal monopoly on search, with the judge concluding that Google was spending $26 billion in 2021 alone. Over $20 billion of that supposedly going to Apple to make sure their search engine remains the default on smartphones and browsers, recognizing that this type of bribery makes it nearly impossible for new entrants to compete, and that Google also recognizes that losing this default position could dramatically impact their business, their profitability. I asked AI Ticker Chat, chatting with AI, this is now a feature completely free to use. I asked, well, what happens if Apple lost $20 billion in money that Google pays annually to be the default search engine? How much could that impact their annual profit? So this is a tool, if you want to interact, about any of the US companies that AI Ticker Chat currently covers. And the conclusion was, based on roughly $100 billion in profit, assuming that $20 billion, that, bribe, whatever you want to call it, from Google is mostly profit, that's roughly a 20% impact to Apple as a business. We'll talk about the impact to Google in a second, but not surprising to see several prudent investors, several super smart investors like Warren Buffett, significantly cutting his stake in Apple recently, trimming it by something like 50%. In response to this court ruling, the Department of Justice is looking to potentially break up Google. Some of the possibilities for a breakup plan that the Justice Department is proposing includes a divestment of the Android operating system, Google's web browser Chrome, possibly the sale of AdWords. So you're looking at the Google empire potentially breaking up. If this is your first time tuning in, my name is Daniel. You're watching Unrivaled Investing. In this video, we're going to talk about the value of a couple of the different pieces of Google and what's currently being priced into the market based on these dynamics. Does the market sort of price in this uncertainty? So let's go in full disclosure, I do own a very small stake in Alphabet or Google stock, but let's keep going to understand, sort of what's going on here. So the first part, in terms of divesting or selling or making Android a standalone business, the part that concerns me the most about this push from the Department of Justice is that it's completely lacking in terms of awareness for the consumer perspective. If anything, this seems to be making a push that could hurt consumers. It's as if they don't actually care if Google has a monopoly, if that actually benefits consumers. If you have something where it's like, hey, we just need to split it up, we need to flex our muscle to show how powerful we are, versus thinking about like, hey, how do we actually lower the cost for consumers? Because if you were to have Android as a separate company, then in theory, instead of this operating system being subsidized through its default position as search and having the search profits subsidize the development of better and better operating systems, you would have a completely different business model where maybe they'd go to operating equipment manufacturers and say, hey, each time you want to sell a device with the Android operating system, you'd have to pay $50. And wait, who's going to get charged for that? That's the end consumer. So I view this it's thinking about all the different possible ways. No one knows for sure, but it is very unclear to me that the consumer actually would benefit from this move by the Department of Justice to split up Google, into these different pieces. The Android is just one example. No one really knows like what would happen if you were to divest, AdWords, or, thinking about the different pieces of this empire. So let's talk about the different pieces in just 1 second. As always, this is not financial advice. As always, as I mentioned previously, I do own shares in Google at the time of this video, publication, though it's a small stake. It's not a top holding. Also, quick plug, recently a premium member of the Unrivaled Investing community shared the following. This is a direct quote. I got introduced to the markets as a speculator during the 2020-2021 bubble. Your content really helped me understand long-term investing. Most of the online friends I made during the bubble are still speculating. I'm trying to convince them to join your membership. The unrealized profits, and he mentions 2 different companies, is enough to cover 302 years of membership. So if you're looking for compelling investment ideas, come check out Unrivaled Investing. When I think about Alphabet or Google broadly, you're looking at a fantastic business. $85 billion in revenue in the second quarter, accelerating from 7% growth last year to 14% growth this year. Profit margins improving, over $20 billion in net income. I mean, this is an incredible business, and it's spread across a lot of different business lines. Google Search, YouTube Ads, their network business, which arguably is spread across a lot of third-party websites, that is losing share and shrinking. But, their search and other properties clearly taking market share. Their subscriptions, platform, devices also increasing, cloud crushing it. They have a lot of other bets. Most of their profits still coming from Google services, but their cloud business is becoming increasingly profitable. So I'm looking at this, thinking about it, currently $160 stock price, ballpark. That means it's around a $2 trillion market cap. So we're going to do rough figures to think about Google, its valuation. Looking at Google Cloud, this is probably one of the easier pieces to think about. It's growing at around 28% this year. Looking at Alphabet, which has margins, looking at Amazon, their AWS business, that has margins of 40% margins. I'm assuming giving a discount because their margins aren't there yet with Google Cloud. So ballpark, I'm saying, thinking about what it could be worth, thinking about its growth rate, I'm saying, it's very possible this business alone, Google Cloud, could be worth, let's say, a $500 billion, $500 billion over time, give or take, $100 billion. But, when you're thinking about Google, Alphabet in total, $2 trillion. And then let's go through the different pieces. So let's say cloud, maybe a quarter of that based on its current, maybe a little bit more depending on the different, framework. But, I think you could conservatively say, hey, this business could be worth, $500 billion. That's Google Cloud. YouTube, absolutely crushing it. One of the leading streaming platforms. Hey, thanks for watching my channel on YouTube. And that's trending towards around $35 billion in revenue this year. Assume around a 40% profit margin on this advertising stream. 35 times multiple because they continue to take market share. I mean, both cloud and YouTube, there's no signs that these businesses are abating. These are crushing it. So a 35 times multiple for, 40% profit margin, that gets to another $500 billion. So just cloud and YouTube, you're talking about $1 trillion against a total $2 trillion market cap. Then throw in cash, Waymo, other bets. That's conservatively valued around $150 billion, let's say, total. I mean, the cash and investments is 120. So you're talking about these other bets, maybe 30. So $150 billion. So you're saying Wall Street is pricing everything else: search, Android, Chrome, music, photos, DeepMind, their leading AI, their devices business at only $850 billion, or about 10 times earnings, if you assume around a 30% margin on these different business lines. So that, in my mind, would suggest that Wall Street is, somewhat skeptical about the long-term sustainability of this business. 10 times earnings for these businesses for search. Some might say, wow, that's crazy. I want to buy a lot. Now, I'm going to leave that sort of decision making for you at the end of the day. I'm just sort of laying out the numbers, but I do think that pricing does reflect, if you agree with the assumptions I've laid out, like let's say 500 billion for YouTube, 500 billion for cloud, another 150 for cash and other bets, that is saying that all these other properties are currently being valued around 10 times current earnings. And so that when you see a business that's growing and it's getting a 10 times multiple, that means it's either extremely mispriced or Wall Street is very concerned about the long-term sustainability of this business. Now, I think clearly, their Google's dominant search position, that is clearly, there are increasing threats that weren't around 5 years ago, whether or not it's Search GPT, that's really not taking market share, or Bing trying to stir the pot. That doesn't seem like it's taking dramatic market share. But I do think there is change in the air. And that is part of the reason why it trades at 10 times. I'm very curious on your opinion, if you think that core part of Google should be worth roughly 10 times earnings. If you think this is incredibly mispriced, I'd love to hear your comments below. You've been watching Unrivaled Investing. Thanks so much for tuning in.